welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, as of yesterday, we've seen the domestic market indices rise for a fifth consecutive session in a row, with the Nifty hitting a 1.5-month high, and that's despite the extreme volatility that we saw amidst the weekly expiry of the Nifty options as well. This was largely led by the IT stocks. Remember, the Nifty IT index well. Banks and the financials also supported in this momentum as well. And now as we move into today, remember, all eyes will be on the Reserve Bank of India's Monetary Policy Committee decision as far as the rates are concerned. They will be concluding their 3-day meeting today and will be announcing the policy. Governor Shaktikanta Das will be making the statements at 10 a.m. sharp today, and we'll be all looking forward to that. Remember, market participants are expecting the RBI to continue to have a status quo as far as the repo rate is concerned, but there is also an expectation that the RBI may provide some liquidity enhancing measures right there, such as a CRR cut too. Now, the global cues are positive and the FIIs have continued to pour in money. Let's see whether Friday turns into a Friday after a fantastic Thursday that we saw yesterday. Good morning, Shail.
Good morning, ladies and gentlemen. Everything depends on the statement that will come at 10 a.m. from the Reserve Bank of India's Governor, Dr. Shaktikanta Das. The market over the last 5 sessions has priced in a CRR cut. If that happens, well, we should see a bit of consolidation from current levels. But if the RBI disappoints, ladies and gentlemen, we've already seen a very sharp run up in the markets, and that might get sold into. For a change, ladies and gentlemen, we'll start with the Bank Nifty, and let me just show you this wonderful graph of the Bank Nifty, which is right there in front of you. Now, what is really interesting to see is that it is just 864 points short of its all-time high, and that, ladies and gentlemen, is the kind of pricing that the market has already done in hopes of a cut in the CRR. Remember, the Bank Nifty's all-time high was 54,460. This was on 26th of September. It lost about 4,100. It lost 100 points have been 11 trading sessions. So that is the rally that has. In this backdrop, the all-time high of the Nifty was 26,277 somewhere in late September. We've gone down as much as 3,000 points to a low of 23,360, and from then on the recovery is to the tune of about 1,382 points. So the markets are sitting at pivot levels, and from here on you will see some kind of either very strong disappointment or an equally sharp run up that has happened. Sakshi's mentioned FI numbers, and it gladdens my heart no end to tell you that 8,530 crores worth of net purchases were done by FIs in the frontline counters, and we've seen very heavy volume activity on Thursday. Was this the climax of selling or the climax of buying? It will only be available at 10 a.m. when the RBI says CRR cut or no CRR cut. So, ladies and gentlemen, between 9:15 and 10 a.m. the markets will be sideways. Yesterday's volatile session has taken the pants off many options traders, and they will be on sidelines. But what is clear is that the bear cartel that was ruling the Lal Strait from end of September to early December, that seems to have sort of emptied its coffers, and this is what we are looking at. Now 24,800 is a very strong resistance for the Nifty. It was unable to overcome it yesterday. Extremely volatile trade, but equally strong support at 24,600 and 24,500. The Bank Nifty, as I have already told you, is a whisker short of an all-time high. Only 860 points are left. HDFC Bank, the heaviest weighted counter of the Bank Nifty, about 39%, as also the is at a record high. Coming up with very strong gains. SBI remains flat, but the entire PSU basket on the banking side was aflame with a lot of gains all of the past 5 days. Many stocks in the PSU banking basket have appreciated anywhere between 9 to 15% over the last 4 or 5 trading sessions. As always, when disappointment, this is the right time for you. Quality stocks, some of them Sakshi and I discuss on a regular basis, and invest wisely in the market. This is what is coming in as expectations for the market today. Let's get back to Sakshi and find out how Wall Street closed and what are the updates coming in from overseas markets.
Well, absolutely. Wall Street retreated from the record highs overnight because this is right ahead of the monthly jobs data. We did see all the 3 indices, Dow Jones, Nasdaq and the S&P 500 closed in the red, 0.5% decline for Dow Jones. Nasdaq closed by 0.1% lower, and so also did the S&P 500. Now, ahead of the jobs data, of course, all eyes will be also on the direction with which Fed policy will be decided going forward from here, and therefore the markets were actually cautious ahead of this number. Apart from this, we'll also look at how the Asian markets also are indicating a mixed opening, is what they've hinted at right in the morning. Nikkei down by 0.9%, 0.3% of a decline on Kospi. Hang Seng up by 1%, and the SSE China also up by nearly 1%. The GIFT Nifty is indicating a flattish start today at 24,795, mildly in the red right now. But it's the overseas investors that continue to believe more in the Indian markets yet again. Third consecutive session where they have bought, and in fact the foreign portfolio investors have mopped up stocks worth 8,540 odd crore rupees. This is the highest amount that's bought by the FDI so far this month, and the DII sold shares for the third consecutive day again at 2303 odd crore rupees worth of stocks that were sold. We'll keep an eye out on the stocks as well that you need to keep an eye out on. So CG Power will be important. The IT department has ordered a demand of 188.8 odd crore rupees. We'll keep an eye out on this one. Seagal India, there's an arbitration award of 54.2 crores that's been received by the company. We'll also look at Lemon Tree. It signed a licensing agreement with in Pavankar for Lemon Tree Resort right there. We'll also keep an eye out on Cummins India. There's a resignation of CFO Ajay Sri Ram Patil effective January 9 that the street will be reacting to. Naiga again will be reacting to a resignation news. In focus, it's entered into an agreement with for Zoya Solution, and with Hitachi India for reward solution right there. From the railways pack, I'm keeping an eye out on RITES. It's appointed as the PMC for IIM Raipur project as well. Mostrip Technologies will be in focus. The board has approved the listing of the shares on NSE as well, so we'll keep an eye out on that too. GPT Healthcare will be in focus. It's entered into an MOU for constructing a hospital in Jamshedpur. Sensitive stocks, of course, will be in focus. So the banks, autos, real estate stocks, because it's the RBI policy. Vodafone Idea will be in focus. On December 9, the board will consider proposal to raise 2,000 crores from entities belonging to the promoter group through preferential issue. We'll keep an eye out on that too. Ola Electric, again the CCPA, which is the Consumer Protection Authority, has sought further details from Ola Electric regarding the show cause notice that was issued in October. This was related to 10,600 complaints that the company had received. So we'll see what the response comes in from Ola Electric on that front. From the auto space, Hyundai will also be in focus. Remember, yesterday they've announced price hikes starting January 1st, and the entire space will also get into focus because not just Hyundai, but all eyes will be on how Maruti and Tata Motors and the rest of the auto companies right there. We'll also keep an eye out on Garden Reach Shipbuilders. The company has said it signed a contract for construction and delivery of the second 7,500 deadweight tonnage multi-purpose vehicle in a series of 4 additional vessels that was signed earlier. So we'll keep an eye out on Garden Reach too. Canara Bank will be in focus. The RBI has approved the stake sale by Canara Bank in its mutual fund and insurance arms through an IPO. And in March 2024, Canara Bank had received this approval to sell stakes in 2 of the subsidiaries right there. So we'll keep an eye out on that too. Several brokerage houses reports also coming in. So we'll keep an eye out on the food delivery space on Swiggy with a target price of 550. They believe there is a better expected execution and valuation catch up, which are the upside risk. However, one should really keep an eye out on. But over FY25 to FY27, they expect Swiggy's food delivery business to grow at a CAGR of 16%, and that's going to be important to watch out for. Apart from this, Indus Towers is in focus. JP Morgan has an overweight rating here with a target price of 520. From the management meet takeaways, they believe 7 to 8% of the tower renewals are coming every year, with bulk expected in FY27, and they believe there is no plan to repay the debt as it is comfortable right now, and the current leverage is comfortable, and hence the cash will be returned to the shareholders right there, and therefore they're positive on the stock. On Newgen Software, Jefferies has a buy report with a target price of 1500, and they believe the recent purchase order from RBI worth 325 million rupees may drive deals from other banks as well for the company. From the healthcare space, Macquarie has come out with a report on talking about the pharma stocks that have corrected in the last few months despite solid Q2 results, offering good entry points. Their top pick is Sun Pharma, and in the hospital space also, they are looking at Apollo Hospitals, Max Healthcare as well. Apart from this, they have reiterated their outperform rating on Lupin, Cipla, Dr. Reddy's and Eris Life Sciences right there. Shail.
8:47, ladies and gentlemen, we are waiting for Mr. Mayuresh Joshi at William O'Neill India to join us. A little later, Kiran Jani, Head of Technical Research at Janam Broking, will also be with us. This is as good a time as any to recap the lovely day that we had in markets yesterday. Look at the Bombay Stock Exchange. Very, very heavy delivery statistics. Remember, 5,900 crores worth of shares was traded on the BSC. Off BSC on the NSC. Yesterday, a very, very strong delivery pattern in CDSL, equally strong patterns emerging into Angel One, into K-Fintech, into CAMS, as also Anand Rathi. All five of these stocks, apart from Angel One, had hit record highs in trade yesterday, and the momentum is likely to continue. Let's look at more counters that are in top shape. Among them, from the electricity producer space, CESE, it rose 2.6% yesterday, 192.5 rupees. JSW Energy rose 2.3% at 666. And what is really very, very exciting, ladies and gentlemen, is with the absence of weekly expiries on the indices, the market and the action has shifted completely to stock futures. The kind of open interest that we are seeing as far as the long side is concerned is phenomenal in terms of percentage on stocks. The open interest on BSE rose 155% yesterday. I've never seen it happen. On Oil India, it was up 63%. Max Healthcare up 61%. Angel One, it was up 61%. CDSL 44%. These are the kind of numbers which I have never ever seen in the last 15 years of F&O data, and this points to a lot of interest moving in from index trading to ETFs. So keep an eye out on the two most liquid ETFs that we have, the SBI Nifty ETF and the banking ETF. Mr. Kiran Jani, Head of Technical Research at Janam Broking, is with us. Kiranji, what are the charts of Bank Nifty telling you?
Very good morning, everyone. So overall, if we look at the Bank Nifty chart, Bank Nifty remained strong during this last month corrections. We have seen double-digit correction on Nifty, but Bank Nifty was quite strong. During that correction, we have seen multiple bottom, or we have with that bottom the multiple bullish divergence, and from that we can see that Bank Nifty has outperformed. Now Bank Nifty is trading above its all important moving averages. Bank Nifty is also formed broadening triangle pattern, which has been broken out when Bank Nifty sustained about 52,700. We have seen after 5 attempts, Bank Nifty able to sustain above 52,700. So it was the initial sign that we are expecting market to retest its all-time high. And post that, since last 3 days, whatever movements are coming, it is giving more confidence that definitely we supposed to touch our all-time high on Bank Nifty. But today, RBI policy is there, so we are just hoping that after that news, if Bank Nifty keeps sustaining about 53,000, then there are very high chances that this Santa is coming with 55,000 kind of a target on Bank Nifty.
Very good morning to you, Kiran. Good to have you with us. Do tell us, with the recent bounce that has come in on the Nifty as well, how are you really looking at the market? Is it a sell-on-rise market, or do you think this is another beginning of an uptrend in the bull market continuation? So, should one start to go long in the market?
Very good morning, Sakshi ji. So definitely this is a new a leg of rally is starting into the market. Definitely it is not a sell on rise market, what technical says to us. Now yesterday, whatever the come down and steadily again market will resume the upswing only. Nifty clearly given a breakout from its inverted head and shoulder pattern. The neckline is somewhere around 24,500. If market keeps sustaining about 24,500, then there are very good chances we are supposed to touch by this December week monthly expiry somewhere around 25,200. So we are quite bullish on Nifty as well because of this inverted head and shoulder pattern breakout. So any dips toward 24,500, 24,400 is the buy opportunity. Keep very strict stop loss below 24,200, and there are very high chances that by this December monthly expiry we can expect 25,000 to be tested.
Okay, that's a view that is coming in on the Nifty. Kiranji, one stock that has disappointed is Bajaj Finance. Absolutely nothing has happened on this one, despite a very strong rally in the Fin Nifty, in the Bank Nifty, and of course the Nifty, of which all three are represented in Bajaj Finance. What are the charts telling you? What activity?
So reason could be anything. So, but technically speaking, stock price was never able to cross its all important moving averages since last 3 months. We have seen whenever prices go somewhere around 7,000, 100, we are facing a selling pressure. Even you can see the F&O data maximum open interest on call side is land of somewhere around 7,000. So 7,000 become very strong resistance, and in NBFC entire space, we can see that not only Bajaj Finance but neither of any NBFC has performed well during this time. Now, because of this policy, if any rate cuts come, definitely there are chances we can see some NBFC to perform. Now coming again to Bajaj Finance price chart, currently prices made double bottom pattern on daily price chart. After a month, we can see that prices is its 20 days moving average also monthly on daily price chart only. The momentum indicator was into the bearish zone. Now it is into the neutral zone also. And since last 3 days, if you notice, the prices are going up. Volumes are also going up. This is the initial sign that prices might have created a short-term bottom, and from here we can expecting some good amount of upside also. So at current market, if anyone wants to go long, definitely they can go long on Bajaj Finance. Give some time to Bajaj Finance. If 6,400 is not taken out, then again we can expect price target of 73, 7,500 for next 1 or 2 months.
Okay. Well, it's the right time to welcome Mayuresh Joshi, Head in Equity Research, William O'Neill India, now joining in on the panel. A warm welcome to you. Good morning, Mayuresh. Good to have you with us. After yesterday's and the last 5 days of a strong move, what's the feel as far as the Nifty is concerned, the markets? I mean, we have entered December. Is the Santa Claus rally soon to begin? And does all of it hinge on what the RBI does today?
Morning, Sakshi. Morning, Shail sir. So to a large extent, yes. And the Santa Claus rally might actually come through, because what we read through in terms of Powell's statements as far as the US economy were concerned, he seemed pretty confident in terms of how the US economy is probably shaping up. Obviously, I think from an Indian context, earnings slowdown is something that we'll have to comprehend with. But I think to counter that, the government capex will well and truly on in the second half. They're hardly 46, 47% of the overall fisc as far as this financial year is concerned. The second half should probably see accelerated capital spending coming through from the government side. And therefore, I think expectations in terms of earnings remaining a little bit soft for the next 2 quarters might be a given. But with the capex expected to come through and green shoots seen in private capex as well, a large part of the expectations is that from the first half, some element of a strong earnings rebound. Obviously, what the governor says today in terms of both the policy decision making as well as statements in terms of supporting growth is something that the markets would ideally like to see. But yeah, I think FIs have slowly and steadily started making an entry back into the Indian markets. And again, the GDP print that was there, which came as a howler, I think initial signs of recovery should start coming through as the capex starts coming back and rural spending comes back with better monsoons this time around. So I think I remain optimistic on the economy, and therefore I think don't see a structural decline in Indian markets. Any fall should be seen as a good opportunity in terms of picking out good sectors.
A very good morning to you, Mayureshi, and as always, it's a pleasure at our end to welcome you. It's very clear to me why markets fell. You've shaved off your beard, and that's the only reason.
No, Shail sir. I think now we'll have a reverse thing. I think I'll be clean shaven, and the markets will make on making new highs.
Chalo. Will that expectation at the back of our mind, Mayuresh, tell us what is your peer group telling you in terms of this priced in CRR cut? Is it going to happen today? And God forbid if it doesn't, what will you do?
I was saying a large part of the expectation, Shail sir, is that the CRR cut will come through. I think there is a very small pocket who also believe that interest rate cut will come, but I don't think that's going to happen. A CRR cut is something that is a given as per market expectations. And therefore, I think the kind of reaction that you probably seen for the banking stocks and BFSI sector in general, I think is a testimony to what the expectations of the street are. If it doesn't come, obviously, I think a knee-jerk reaction as far as BFSI is concerned. But again, I think it might be a knee-jerk reaction because, again, I think a lot of reports that liquidity is strong in the system. Obviously, I think with the expectations of advanced tax payments, so on and so forth from December 15th. And again, I think the year end, as far as the calendar year is concerned, there might be some elements of liquidity squeeze in a scenario where growth is probably needed at this juncture with consumption going down. My own sense is that the CRR cut shall come through today in the RBI meet, and the commentary might be a little bit more growth supportive in terms.
Okay. Well, Mayuresh, also wanted to quickly ask you, since the FIIs have returned to the D Street and with yesterday's number upwards of 8,000 odd crore rupees, do you expect the large cap heavyweight banks and ITs to be in top form? Is that the space where all the retail investors should begin to focus their investments, fresh funds as well?
You've already seen that, Sakshi. I think the Nifty IT index hit all-time high yesterday. Again, banking stocks seem to be well placed. And therefore, I think the whole premise here is whether rate cuts happen or not. I think the system probably is well geared up to support growth for industries over the next few years. From a valuation perspective, it is well placed. For the first time last month, you've actually seen deposit growth at 11.8% versus credit growth at 11%. So I think deposits are slowly and steadily trickling back into the system. The Treasury is doing a good job as far as banks are concerned. And therefore, I think banks or BFS as a space generally over a period of time should do well. IT has done phenomenally well with the expectations of a cycle or a corporate rate cut cycle in the US. More discretionary spending for corporates in terms of budgetary allocations is something that the street probably believes in. Obviously, what happens in terms of visas, like we've seen in the earlier Trump presidency, you already started seeing murmurs in terms of more tariffs happening on chipsets, manufacturing, AI access to Chinese companies. But that hardly affects outsourcers like us. They are well attuned in terms of managing their workforce at the same time, ensuring that the kind of discretionary spending that happens in key areas like cloud computing, AI, generative AI, orders will continue to flow. And that is what the management commentaries are expecting. So I think anybody holding on to qualitative stocks in the IT space should continue.
The pre-open is upon us. It's a mild downtick, and this is the volatility that is continuing from yesterday's very, very sharp volatile day. Let's hope it settles a bit sooner than later. Mayuresh, one more question that I had in mind is on this massive rally that we have seen in the wealth management space. Look at the exchanges yesterday, in particular BSE. Look at how CDSL, CAMS and KFintech have improved their standing over the last maybe a week or so. Brokerages are doing phenomenally well. Angel One, Anand Rathi. What is fueling this move?
Sir, I think three basic points. One, I think the flow towards capital markets and specifically equity markets in general have been improving quite significantly. You've seen the number of demat additions that have happened post-COVID, and it is increasing at a burgeoning rate and at a good pace as well. Of wealth allocation, it's only 5% that are probably invested in equities right now, where the global average is far, far higher. So as that number inches higher every passing quarter, every passing year, we're probably going to see much more capital-based activity. And therefore, I think the entire ecosystem, whether you're talking about exchanges, whether you're talking about depositories, whether you're talking about discount brokers, whether you're talking about asset management companies as well, is expected to grow at a very fast pace. The second aspect is also the wealth creation process. I think as the Indians move up the ladder chain, what we probably got at this juncture as we end 24, $2,500 in terms of per capita GDP, that is expected to go to around $4,000 by 2030. And as that happens, I was reading a very interesting chart. The top bracket, you might actually double in terms of the disposable net wealth that they've probably got. And a large part of that wealth might come back into the equity markets, either seeking professional advice or on their own. So I think this entire ecosystem should continue.
Let's also get back to conversation with Kiran right there. Kiran, what are the key stocks that you're looking at? Which are the pockets that you feel will be safe pockets today? Because again, there's an expectation 10 o'clock we'll get to know the statements. So should one stay away from the rate sensitives as of now, or should one continue to focus on banks and financials? What would your sense be?
So basically, we are suggesting two different kind of a sector or a stock over here. One is a rate sensitive, and another is the large cap one. So Reliance Industry looks very much promising at current market price. As we discussed about the Nifty chart, the same pattern we can see on Reliance chart also. It has been underperformed since long time, and after that we are seeing that Reliance has forming a inverted head and shoulder pattern at current market price. So one can go long at current market price on Reliance. Say for example, the price is somewhere around 1320, and it dips toward 1310 would be the buy opportunity. We are expecting a price target to touch somewhere around 1360, 1370 in three, four sessions upcoming, and you can keep a very strict stop loss below 1300. The risk reward ratio is very much favorable, so one can go on long on Reliance. Second, we are very much bullish on auto sector, and within the auto sector, two-wheeler space, Hero MotoCorp looks very good. If you look at the Hero MotoCorp chart pattern on intraday perspective, Hero MotoCorp has formed a three-bar bullish divergence. Yesterday, we have seen there was a bullish reversal candlesticks pattern, and it has filled this gap on daily price chart also. So we can expect some reversal point at current market price. So one can go long on Hero MotoCorp. The price is somewhere around 4640. We can expect price target of 4750, 4800 in upcoming time, and we have to keep a very strict stop loss of 4600. So Reliance with the 1300 stop loss and Hero MotoCorp for the 4600 stop loss, we both like to go long.
Okay, got that. Let me also bring in Mayuresh right here on the auto space particularly. Mayuresh, what's the sense that you're getting? Should one look for bottom fishing at these current levels? There is two kind of, points that we need to keep in mind. Two-wheelers, especially Bajaj Auto, cutting some of the prices there, whereas Hyundai has already announced its price hikes from Jan 1st. So the end of discounting era from last 3-4 months, or that was continuing in the auto space, will find end, and beginning January we may see passenger vehicles and cars pricier in trade right there. How is it that you're looking at the entire auto space right now?
So again, I think two-wheelers, four-wheelers have done phenomenally well. MHCV is the segment is still struggling a tad bit in terms of volumes, and ancillaries have also relatively outperformed in the past few quarters. But again, Sakshi, I think the last quarter or last couple of quarters is where I think the high base of the last couple of years has started kicking in. We've probably seen volumes consolidate at this juncture. And therefore, I think, as I've always maintained my stance, I think it might be a consolidation phase as far as earnings is concerned. over the next couple of quarters for a whole host of OEM players. Obviously, valuations are not cheap, and therefore, I think if earnings consolidate, the street might actually also uh, start losing about how the earnings will play out in the first half of the next year. But my own sense is that with a lot of launches expected in the coming few years, whether it's two-wheelers or four-wheelers, you've already heard a slew of launches expected to come through. Demand should come back strongly. Rural demand should come back strongly. Urban demand should start catching up because urban consumption has not slowed down in all pockets. And therefore, I think the first half of the next financial year is where earnings should start coming back for a whole host of these auto companies. But I think till that point of time, I think a large part of this universe might actually consolidate. And it's a very healthy sign for the universe as well. So I think we remain optimistic selectively in terms of auto ancillaries at this juncture.
Yeah.
Names might actually consolidate.
Okay, got that. All right, so the market is settling in the pre-open trade 24,729, just about 21 points higher in trade for the Nifty. And when we look at the sectoral trends, most of the sectors indicate to a positive start right there. About 0.5% gains for PSU banks. Pharma could be in focus. Autos, consumer durables. But the IT could be in the back foot as of now is what is being indicated right now. When we look at the kind of moves that we are seeing on the Nifty, Trent is up 1.1%. Cipla, Bajaj Auto, Asian Paints, these are the pockets that could be showing up strong. Then apart from this, in the PSU space also, keep an eye out on the oil and gas space as well today. Looks like IOC could be opening about 1% higher. Oil India could be in focus yet again as well. Same way, OMC's HPCL, BPCL could also be in focus yet again right there. So that's the indication as far as the pre-open trend is concerned. Let's get in touch with Kiran yet again and to ask him on specific stocks within the PSU pack. Where exactly would you continue to see momentum today? We've been seeing these railways, defense-related stocks come back in action. Anything specifically in particular stocks?
So in PSU, we are seeing that all kind of the sector are doing very good. So first, I wanted to comment on the PSU bank. If you look at the PSU bank price chart, most of the bank has formed double bottom pattern. So within the PSU bank, Canara Bank, we are liking very much. The clear classical double bottom pattern breakout we can see. Prices are sustainable. It's 100 days moving average also. So post today's policy, if price continue remains above 105, then one can go long, keep a very strict stop loss of 105, 100 rupees. If price is sustainable 105, we can expect price target of 120 in short time. So within the PSU banks look very good, and Canara Bank is our preferred pick. From railway or railway PSU, IRCTC looks very much promising. Now again, we just had a festival season, and now again December weekend are coming, Christmas and all. So generally people travel, and this travel theory can help IRCTC to go again from here. Already we have seen the falling channel breakout has been given on daily price chart. Price is already sustaining about 20 days moving average also. So 130, 135 price sustaining. You can go long at current market price, keep very strict stop loss below 820, and we can expect price target of 900 very soon. So Canara Bank and IRCTC both are our preferred pick within the PSU.
Mayuresh, when you began your conversation, you mentioned that the IT index is already at a record high and conversely, the rupee is at a record low. In this space, are there still any mid caps or large caps which you feel offer value? A record high on HCL, on Tech Mahindra, already that we are tracking, and of course, there is no stopping Coforge, Persistent, eClerx, Quest, all of them at record highs. But is still value to be had somewhere?
Very difficult share, sir, honestly. I think they have run up too much. And again, valuations have become a tad bit steeper. When you compare the 5 years standard deviations. So somewhere I think they have to cool off. But obviously, as I said, expectation in terms of earnings, pricing remaining in their favor, margins remaining supportive is something that is creating a lot of momentum as far as these mid-cap IT stocks are concerned. But just as a disclaimer, I think Coforge, emphasis and Persistent is something that we continue holding in our global portfolios. But let me be very clear, we probably recommended this and hold them from far lower levels.
Okay.
And what about Bikaji?
Sorry, I didn't get that.
On Bikaji Foods, Mayuresh.
I was asking about Bikaji to you.
No, I still enjoy sometimes snacking with Pikachu, indeed. But that's it.
Is it?
Yeah. So I think valuations have become
So,
a
ladies
tad
and gentlemen, we've made. I agree. We've made a very decent gain on Bikaji. Mayuresh started at 495, and this is what is there in front of you. And this is not the peak price of Bikaji that we've seen. It's appreciated dramatically beyond this, but a great trade. Mayuresh, anything that caught your fancy in the mid cap and the small cap phase, which corrected very sharply over the last 2 months and is now ripe for picking?
So our sense, Shelter, is something like a capacite infra. Our belief is it's not corrected too much, but the entire premise in terms of the real estate cycle still being at its midpoint and expected to do well as far as the overall numbers are concerned. PC part is concerned, and therefore I think the order book that they're carrying in excess of 9,500 crores gives revenue visibility over the next 4 years. They've got a good ideal mix between public and private orders that they need to execute. High rises is where their specialty is, and we've probably seen in metro cities, in urban areas, vertical rises is something that is coming up very sharply over the last few years. Would continue doing that. Strong set of numbers as far as top line is concerned. EBITDA margins are very stable, and balance sheet looks very strong. As far as the is concerned at Markets with India, their EPS rating as far as earnings is concerned in the past and expected earnings along with ROE improvement, along with strong institutional holding is something that we like. So something like we like in the mid-cap space at this juncture is the capacity.
Okay, got that. Let's come to Kiran again to quickly get a sense of how should one be really looking at these capital market stocks that were rallying in trade yesterday. Do you think the momentum will continue in any of those, Kiran? Should one take a bet again? BSE, CDSL, CAMS, Angel One. Do you think the stellar move can continue here?
So looking at all these platforms, looks very much promising because it has given a breakout at current market price. So one can go long at even current market price or any dips towards 3100 would be the great buy. The cup and handle pattern or on a long-term time frame, we can see inverted head and shoulder pattern is getting breakout. So definitely one can look at into the Angel One, keeping a stop loss below 3000. And if you are okay to give 2 to 3 months, definitely you can have a big target on Angel One. So one can definitely go long any dips towards 3100.
Okay, ladies and gentlemen, we are getting ready for the final day of the week and possibly the most important one. At 10 a.m., the Reserve Bank of India will begin its commentary for the credit policy for the busy season, and the prices are upon us. Let's look at what is HDFC Bank doing, 0.5% lower at 1856. ICICI Bank is 0.6% higher, 1344. Reliance is down 0.3%, 1318. Infosys down 0.3%, 1929. And of course, HCL Tech in the green. This is what the heavyweights are doing. Let's shift focus to the top gainers and top traded. There is absolutely no stopping Bombay Stock Exchange. Now 2.3% higher. It's the top traded counter, 5,329. A green tick on CDSL, 1876. Indus Star is in pink of health. Remember, yesterday there was another block deal, 1.7% higher at the moment, 367.65. Angel One is down 5.2% higher from rights, 299.8, 4.3% higher. You have in the green counters such as Ramco Systems, 6% higher, 506. A strong move that is coming into Hubtown, Circuit up 5%, 324. You have a great move coming into a recently listed stock called Sagility, 5% higher, 39.75. A strong move coming into McLeod Russell, 5% higher at 48.13. So this is how the markets have moved. Any new highs that we can see? Well, we've discussed BSE and CDSL. 63 moons. This is 3.7% higher, 795. Car trade, 1467, 2.7% higher. And of course, there's no stopping Mafang ETF. Now in a new orbit, 130 rupees 18 paisa, 2.7% higher. This is how the markets have started. Nifty down 7 points. This is a flat trade that we expect till 10 a.m. And of course, the IT index in a bit of a red at a record high yesterday, giving back some of those gains. Kiranji, anything that catches your fancy in the opening quote?
So looking at opening, definitely a muted opening, but the private banks looking very good. Look at ICICI Bank, it is trading near its almost all-time high, and on daily price chart, the consolidation pattern is getting breakout. But however, the RBI policy is there, so we are just in wait and watch mode. If post the RBI policy, prices keep sustaining about 1330 level, 1340 level, then one can definitely go on ICICI Bank. Looking at overall chart pattern, definitely we can expect price target of 1380, 1390 in upcoming time. So ICICI Bank looks very good. Another stock which we are liking that is from the metal sector, VDL. VDL is giving again a fresh breakout from its rounding bottom pattern. Already it has given a breakout from its falling channel. Stock price was trading below its 50 and 100 days moving average. Now it is above its 50 and 100 days moving average. So one can go long on VDL also. So ICICI Bank and VDL looks very much promising at current market price.
Okay, got that. Mayuresh, since you were talking about snacking on Bikaji, how about ordering on Zomato and Swiggy at this point in time? Are you ordering afresh any of these stocks for investors' portfolios right there? Is the valuation gap reducing? Is that giving you some comfort on Swiggy more? Or do you think post 300 Zomato is probably ready for another leg up and one should continue to focus there? How should one really pick and choose between the two now?
I think Zomato has done a large part of its work by giving an amazing price moves, actually. So what they've probably done in terms of their turnaround as far as Blinkit is concerned is commendable, and the street has rewarded that. Obviously, Swiggy's discount has narrowed down, but is still at a significant discount to Zomato, and the management commentary has been taken very, very well post numbers. So end of third quarter next year is where they expect the food delivery business to post a decent EBITDA margin, and 2 quarters down the line, Swiggy Instamart, their quick commerce business, expected to break even as well. So I think going by what Zomato delivered a few quarters back in terms of their outlook, I think the street is optimistic that Swiggy might be able to do that as well. But I think the next 2 quarters are critical in terms of how this entire transition is happening, how the losses are reducing on each individual business segment for Swiggy. If that probably happens, you might see a re-rating around the corner for Swiggy. Zomato, I think, with the cash on the books for both Swiggy and Zomato, Swiggy in excess of 8,000 odd crores. Zomato's done just a raise. They are doubling their dark stores, 2,000 for Swiggy, for Zomato as well. So I think the business premise probably remains in an optimistic zone for both these players. But in my opinion, at this juncture, they're priced to perfection. They might just consolidate for some time.
You know, Sakshi, what's really interesting?
What?
Zomato's market capitalization dividend is more than the top line of Zomato. So, you know, I don't know whether the market is right about Zomato or wrong about Coal India. I don't want to stick my neck out and become a fool by making a reel 6 months later about any one of these stocks. But this is what I'm telling you. Is the hard reality based on numbers that the market capitalization of Zomato is ahead of Coal India. Coal India is the largest digger of coal in the world. The dividend payout of Coal India is more than the top line of Zomato. I am not talking about any other number which is top line, bottom line, growth, this and that. But this is how markets are valuing. When I checked this out, Mayuresh, it shocked me beyond belief. But this is what it is.
I think it's all about new age, right? So I think new age stocks, the flavor with new age stocks, I think continues for the market, and markets are always on the front foot, looking out for new ideas. But I think sometimes grinding out old ideas, old-fashioned ideas, still makes sense over a longer period of time.
Correct. Correct. I mean, this is not a market aberration. This is a market reality that all of us can check with so many free software available. But and I personally believe that we are going to see a fresh high on Zomato beyond 300.
Right.
But that's how life is, and that's how we need to get over it. A blowout happening on Bank of Baroda, and of course a very strong move coming in on erstwhile. I think it's going to be a metals day today. In the green is the Nifty, back again 7-6 points higher. Remember, the first 45 minutes of trade are going to be flat because we are moving into the major event which is today. And of course, let's look at the advanced decline ratios that are there in the market. And right upon us is the top gainer for today, which is the FMCG index, 0.5% higher. Sakshi and I track 19 indices for you. Out of 19, 16 are in the green. Advanced decline ratio is distinctly in favor of bulls. This is the 6th session where the advanced decline ratio is favoring winners. 1,540 shares in the green versus 630 that are in the red. A quick one, Kiranji, from you on Hindustan Copper and Hindustan Zinc.
So from Hindustan Copper and Hindustan Zinc, our preferred pick is Hindustan Zinc. Earlier also we discussed about Hindustan Zinc because the OFS come prices is trading at lower level. Otherwise, when silver touched is 1 lakh prices, Hindustan Zinc also made a high of 580. Post that, because of OFS, now prices is again back to 500 level. But looking at pattern, one stop loss of 480. If prices is not going below 480, you can expect a very good amount of rally should come on Hindustan Zinc for sure. So definitely one can go long on Hindustan Zinc. There are two tailwinds. Mayuresh sir can highlight us more, but the way zinc commodities performing and the way silver is performing, Hindustan Zinc can be the favorite stock as of now.
Okay. Got that. So we'll keep an eye out on Hindustan Zinc. Let's understand from Mayuresh, we've stopped talking about Trent now. I wanted to bring that up again. It's the top mover again in trade today after the consolidation that we saw over the last 5 weeks or so. Do you think it's fair enough to look at Trent yet again, or do you think it's still way above the comfort level?
No, valuations are still expensive, Sakshi. No two ways about it. But I'll give you an example from my own sense. My daughter shops from Zudio, so I think she just loves the brand, right? So I think a lot of millennials are liking that brand. It's fits in their budget. It's the pricing is appropriate, and they are changing their business strategies as the markets are evolving. So I think Zudio has done wonderfully well for them. Obviously, I think the expectations in terms of West Side, the private labels that West Side probably carries, is also having a steady state show. Zara is having a steady state show as well. And therefore, I think the kind of expectation that one carries and the management outlook in terms of revisiting their store sizes over the last few quarters, reimagining their businesses over the next 5 years, I think all that is in good stead in terms of ensuring that the top line and the margin performance remains very, very steady. But for the stock to probably ensure that it sustains its premium valuations, it has to outdo market and street expectations. So if it is delivering a double-digit growth, it has to do 3-4 percentage points more than that to probably justify the kind of premium that it is getting compared to its players, like Aditya Birla Retail as an example, like a Raymond Lifestyle as an example. But it's got far more diverse elements within itself that probably aid in terms of so yeah, I think anybody holding can hold on. But again, I think valuations still, in my opinion, are a tad bit expensive.
So that's the view that is coming in on Zudio, and I think children are better indicators of what stock we must. Zomato first 5 years earlier than what people like me did. I I still haven't ordered ever at Zomato.
What do you
But
say?
I eat a lot of food that comes in from Zomato at home. Yeah, I don't have any app on my phone. I am a complete phobe. Despite the fact that I started tracking, never ordered. My first
On
digital
Blinkit.
payment, I must tell you publicly to shame myself, was about 1 year ago. I've never made a digital payment in my life. So, ladies and gentlemen, Zomato's market capitalization is 2,90,000 crores. Coal India's is 2,59,000 crores. So, the top line of Zomato is 15,855 crores. Coal India paid more dividend than that. So, this is how life is. We must accept it, move on, and pick up Zomato as a portfolio pick, maybe at 180 rupees when we were discussing it with Mr. Samir Arora. Now, of course, at 297, but a strong move coming in nonetheless. Mayuresh, a very quick one on metal counters. Anything that catches your fancy? Today, metals are in top shape, and we started the day with this news that Chinese imports of steel in India are at a record high.
So that still continues because their firms still need to produce shells, so that their capacity utilization of their firms continue. And even if they are producing reasonable to keep their factories running, they're dumping it at a lower cost. So if you probably look at the pricing trends on how HRC, CRC prices have played out over the last quarter and in the last month as well, it's a declining trend. So somewhere I think LME prices of HRC, CRC on the lower side, it needs to get compensated by far higher volume growth. So in the domestic context, a large part of that volume growth is expected to come through. But since pricing is not in its favor, or for the industry as well, specifically as far as ferrous is concerned, there will be elements and doubts as far as the exponential increase in bottom line is concerned. I think within non-ferrous, aluminium still looks to be in the sweetest spot, both in terms of the regulatory changes that China has adopted. Expectations of beverage can market as far as Novelis as an example is concerned is looking very, very strong. And therefore, the end user applications seem to be on very strong footing. Inventory levels globally at an all-time low level. You're probably seeing prices bottom out as far as aluminium is concerned. And the integrated players, both Nalco and Hindalco, who have access to both bauxite as alumina, I think that creates a significant amount of traction as far as margin performance is concerned and operating leverage on balance sheets. Plus, dividend yields are very, very good, specifically for a player like Nalco. So I think within the space, aluminium makers a tad bit better placed.
Okay, got that. So that's as far as the metal space is concerned. Autos are picking up pace as well. We have the two-wheeler names like Bajaj Auto now inching higher, 9,075 right now for Bajaj Auto, 2% uptick. You also have Eicher Motors that's pulling up, 1.8% up. Hero Moto is up by nearly 1%. TVS is also up by 0.8%. So it's a two-wheeler space that's in action as of now. Kiran, anything that you'd like to look at?
So Hero MotoCorp we already discussed. We gave a buy call on Hero MotoCorp. It is already performing well. If anyone wants to go long, they can go long on Hero MotoCorp. Looking at overall chart pattern, if 4600 held, then we can expect price target of 4800 in upcoming time. So definitely Hero MotoCorp can we look at go long at current market price. Another stock which we are liking, it is not from the two-wheeler space, but Mahindra and Mahindra. If you look at the Mahindra and Mahindra price chart, the stock price is trading into the ascending triangle pattern. It's a consolidation pattern, but it's a continued bullish pattern. Now, since last 3 days, the stock price back into the high bottom pattern, and it is above the resistance line. So one can look into the Mahindra and Mahindra at current market price. Any dips toward 3,050, 3,060 would be the great buy. Keep strict stop loss below 3,000. And looking at overall chart pattern, definitely you can expect price target of 3,200. So Mahindra and Mahindra looks very much promising at current market price.
9:31, ladies and gentlemen. The first 15 minutes have lapsed in the market. Markets are flat as they can be. And why shouldn't they be? Nifty's rallied 1,300 points in the last 7-8 sessions. Bank Nifty has rallied 4,000 points ahead of his RBI credit policy. And there is this sideways move that's happening as far as prices are concerned. Two of these moves stand out. CESE, there is a breakout that's happening. 2.6% higher, 196. Let's get Kiranji's view on this one. Kiranji, a breakout on CSC. I can't put it in any other word, but what do you feel?
So yes, definitely it's a breakout candidate. A falling channel breakout is there. Also, we can see on daily price chart there was a resistance of 190, and from that stock price tested 170 level, which is a 200 days DMA. And from there again is slowly and gradually getting into the high top high bottom pattern. It's forming a rounding bottom pattern too. So multiple pattern breakout is there. At current market price or any tips toward 190 would be the accumulation zone. Keep a strict stop loss below 185. And looking at the overall chart pattern, we can expect price target of 210, 215 in upcoming time. So risk reward ratio is somewhere around 1:1, but overall stock price looks very much promising. One can go long.
Okay. All right, so that's as far as CESC is concerned. A lot of other names within the F&O space also, Kiran, that you could look at, stocks like NCC, for instance, that's buzzing. Metropolis Healthcare from the healthcare pack is also buzzing in trade within the F&O space, apart from CESC that you talked about. There are some other stocks like even PB Fintech that's also moving in trade. What really attracts your attention here in the F&O space?
So in F&O space, if you look at the overall, the build-up is coming out. It's across the sector. It is not just one sector is giving, but within that you can see some of the private PSU bank again into the picture. You look at the Bank India chart. If you look at the Bank of India price chart, again it is trading above 115, 118 level. And since last 5 days, if you look at the open interest is changed heavily. The volumes are also getting changed very much heavily. So one can look into the Bank of India price chart at current market price. 118 is the price chart on F&O. Many dips to 115 would be the accumulation zone. Keep a strict stop loss below 110, and we can expect price target of 125, 130 in upcoming time. On another space which we are liking, that is ancillary space, auto ancillaries. The way autos are getting bottom out, you can look at the auto ancillary space, and within the auto ancillary space, tire stocks look very much good. So C8 and Apollo Tire. So Apollo Tire is in the F&O space. So one can look on the Apollo Tire also at current market price. Overall, we have seen inverted head and shoulder pattern breakout at 530, 520 level. From that, stock price is already at 540 level. So we are not chasing this particular stock, but any dips toward 530, 535 would be the great accumulation zone. Keep a strict stop loss below 520. And if that level is held, then we can expect price target of somewhere around 570, 580 in upcoming time.
Got that. So that's as far as the F&O space is concerned. Mayuresh, before we let you go, could you also give us a sense of, in terms of, the kind of preparation that one needs to do for the upcoming new year, 2025? If one has been holding on to cash amidst this entire downturn and maybe looking at a fresh opportunity only once there are solid signs that the markets is out of, has made a bottom and is out of the correction zone as well. What is it that you would advise to all those people for 2025 now?
I think these should come back, Sakshi, in the first place, in the first half of the next financial year. And therefore, I think the markets will react as we head into the budget, right? So once the budget is over, a large element of the fraud as far as largely behind us. And therefore, CapEx program would continue over the next few years. Private CapEx, as I said, issues coming back, rural spending coming back, pockets of urban consumption holding up. And generally, I think should start coming back in the first half. So generally, I think few broad themes. I think BFSI as a theme should continue doing well in my opinion. Select leader stocks within the banking name, select leader stocks within the housing finance name should continue doing well over the next few quarters and years. Agrochemicals as a space, I think they should report strong set of numbers, not just for the next few quarters, but generally, I think the trend in terms of a lot of good players within the space, backward integration, will mean that they will have complete control in terms of processes, right from the start process at the factory till farm gate prices are concerned. So agrochemicals as a space, selectively leadership stocks here look good. Infra manufacturing, capital goods, cement selectively are well placed. Again, a lot of consolidation happening within the industry, good order flows expected, they are executing well, margins are looking relatively better, and therefore earnings should hold out over the next few years. So again, I think a few sub-themes within that. Power becomes a huge sub-theme for the next few years. Within power, renewables, EPC players, as a context to the entire infra manufacturing. become good themes as well. And last but not the least, I think consumer discretionary, stroke durable selectively should do well, because the entire premise of per capita GDP actually doubling over the next 7 to 8 years will mean that the industrial boom as well as consumption boom will both be seen in India. Indians will consume more since we produce a lot of these elements domestically. I think both these elements will get interlinked and ultimately aid the GDP and the overall earnings growth as far as the micros are concerned. So remain optimistic, but I think these 3, 4 broad sectors and sub-sectors within that should do well as a portfolio construct in 2020.
Perfect. Well, on that note, thank you so much, Mayuresh, with us on this show and helping all our viewers, like you always do, with fantastic insights on the markets and the outlook as well. Appreciate your time as always. Thank you so much for being with us on Business Today.
Thank you, Shail. Thanks, Tom.
All right. We'll continue our discussion with Kiran right there to get some of the ideas that you can focus on technically, viewers. Kiran, I think it's autos and FMCG that are now in top gear. FMCG also, ITC is pulling up 1.1% higher in trade. Are things turning in favor for ITC?
Yes, definitely. If you look at the ITC, Hindustan Unilever, both stocks are performing very well. Now, ITC, after that cigarette news, stock price is not went below much lower, and it has a very good support of 200 days moving average. And from there, we are seeing bounce is also coming. So stock price has resistance, but overall, the chart patterns look very much promising, and it's a very low risk trade. So one can go long on ITC at current market price, keep a strict stop loss below 460, and you can expect price target of 500 again. One more from FMCG sector only, Hindustan Unilever. Overall, now again, Hindustan Unilever is trading below its 200 DMA. That is something which we have to cautious. But looking at overall chart pattern, definitely one can go long on Hindustan Unilever at current market price. Keep a strict stop loss below 2430. And if 2430 is not taken out, then one can expect price target of 2580, 2590 in upcoming time.
Okay. Got that. So that's as far as the FMCG space is concerned. You know what's pulling up as well within the PSUs is again some of those railway stocks that we were discussing. Kiran, IRFC has been showing some bounce over the last few days. It's again up 1.5% higher at 153 odd levels. Are you really looking at things turning back and reversing from the lows for IRFC particularly?
So looking at IRFC definitely a very good candidate as a reversal chart pattern. Already has given a breakout at 140 level. Post that stock price made 160 is the first high, then second 155, and today the stock price is trading is second day's high. So it's again a fresh breakout on the daily price chart. It's a very good promising chart. Looks like at current market price one can go long on IRFC at current market price. Keep a very strict stop loss below 140. And if 145 is held, then we can expect price target of 170, 175.
Okay, got that. So that's as far as IRFC is concerned. Viewers, we'll look at how the broader markets are taking shape from the Nifty 500. There are several names that are actually pulling up pretty strong today. You have Sadbhav Engineering, that's up 7%. You have ITI, that's up 8% as well. Dhani Services is up by 8.8%. Gopal Snacks, we were talking about Bikaji, but even Gopal Snacks is up by 9% in trade today. Then you have something like Setco. Answer back. Kids Engineering is 11%. Umang Dairies is up 20% circuit in trade. And then you have Landmark Properties that's also up at 20% circuit in trade. A lot of these stocks are buzzing with strong gains. Elgi Rubber 7% higher. It's been in momentum as well. Some of these stocks right there from many days now. From this broadest is done for some of them, and one should be very cautious.
Overall, if you look at the market structure, I don't think so we have to chase any particular because the RBI policy is there. I guess we have to wait for some of the time. Yes, post RBI policy, there are a few names which we are like Oberoi Realty is already return. So we don't want to chase Oberoi Realty, but I guess is giving a breakout from rounding bottom pattern and also falling channel. So any dips toward 1300 would be the buy, or you can keep a strict stop loss below 1300, and you can expect price target of 1500, 1600 in upcoming time. Another stock from Reality which we are liking, that's the Shobha Limited. If you look at the Shobha Limited price chart as of now, the losses is 1700 level, then you can move on Shobha Limited also. So
Again, look at some of the other pockets that are pulling up pace. I think it's the power related stocks that are coming back in strong shape. NHPC is up by 1.5%. You have Power Grid that's also pulling up about over a percent higher. Then PFC is also up by over a percent. REC up by over a percent as well. Some of these power related stocks are actually doing very well in trade. Anything as a trend that you spot here, Kiran, within the power related space? Last few days we've been seeing renewable energy and the mainstream power companies also come back a little bit. Do you think this bounce and this trend will sustain for some of them, if not all?
Within the power sector, I guess we liking Coal India at current market price. Power Grid, NTPC are all are the runaway rally kind of a candidate. But if you look at the reversal point of Coal India looks very much promising. Now stock price is trading below its all important moving averages, that is there. But if you look at since last couple of months, price are moving back into the height of high bottom pattern. So very much low risk trade is available. If you look at the intraday chart pattern or even a daily price pattern, the all indicators went below its oversold territory, and from there it is bounced back. So overall risk reward ratio and chart pattern look very much promising. A reversal trade. One can go long on Coal India at current market price. Keep a strict stop loss below 410. And if that level held, then we can expect price target of 440, 450 for sure.
Okay, got that. So that's the view that's coming in on Coal India particularly. We'll focus on that as well. Let's see what else is in top form. Consumer durables are now picking up pace, about 0.5% higher in trade for this one. And there's a stock, Blue Star, that's sharply higher in trade at 2091 now, 6.4% higher. That's moved up pretty sharply. You also have gains coming in on, say, a Voltas or a V-Guard, Amber Enterprises, Havels, but this one is strong showing currently. Blue Star particularly, the trend today, will it carry on, Kiran? Is there anything else also that you'd like to add on the list when it comes to the consumer durable space?
So two stocks which we are liking. One is the Havels and another is the Blue Star. Is also on our radar. The day before yesterday, we suggested somewhere around 1900, where the stock price is giving a breakout from its falling channel and the rounding bottom pattern. From there, we were also not expecting such kind of a fire moves. But overall, price pattern is also still bullish. So one can go long at current market price. As a disclaimer point of view, already suggested to our client, and we have trailed our stop loss to 2000 level. So if anyone wants to go long on Blue Star, they can go long at current market price. Keep a strict stop loss of 2000, and looking at price chart pattern, we can expect at least 2200, 2300 kind of a target on within this 1 or 2 months. Another stock which we are liking, that is Havels. If you look at the Havels price chart, stock price made a high of 2100, and from that it has given a correction of somewhere around 20-25% and tested its 1600 level. From that level, now stock price is building a double bottom pattern at current market price, and one can go long at current market price with a strict stop loss of 1700. If 1700 is not broken down, then we can expect price target of 2000 again. So Havels and Blue Star both are our preferred.
Okay, got that. Havels and Blue Star, that's the kind of expectation that you can continue to have within the consumer durable space as well. Those are the stocks that are buzzing. So autos now up 0.5%. You have the oil and gas space stocks that are also pulling up. Durables we've already marked for you. Metals we marked, FMCG as well, which is garnering a lot of strength. Nifty, you have the auto names, Bajaj Auto, Eicher Motors in top form. Now BCL is pulling up 1.4% higher within the OMCs. All the three OMCs, in fact, IOC, HPCL, BPCL, they are in fine shape as of now. Those are the stocks that in trade. Anything within the OMC space that you'd like to carry on the trade today, Kiran? All three of them are actually up. BPCL is actually coming back strongly in trade. There have been some stellar returns in this year so far as the OMCs are concerned. But of course, they've been lying low from the time the correction in the market started, as well as, the geopolitical tensions and the crude oil volatility also started on. Your sense now on how should one fresh approach these three stocks, BPCL, HPCL and IOC?
So BPCL, HPCL and IOC, if you look at all three chart pattern, we are liking IOC at current market price. Reason being, stock price is on its 20-day swing average, and recently stock price has formed a cup and handle pattern on price chart. So overall price chart looks very much promising. On momentum indicator, in oversold territory, we can see 3 bar divergence also. So again, a second level confirmation is already there. So one can go long on IOC at current market price, keep a strict stop loss below 135. If that level is not broken down, then we can expect price target of 155, 116 upcoming time. So IOC looks very much promising.
We are 13 minutes away from the most important statement that will come in from the Reserve Bank of India governor. 10 a.m. is when the credit policy starts, and so far it's been a sideways trend as far as markets are concerned, but some hectic activity you can see across the board, especially in railway stocks. I've marked rights. IRFC is in top form, 1.2% higher. Let's look at some winners for today. Stocks that may have hit record highs in trade. Let me just mark a few of them that will show you where the money is moving in. Policy Bazaar, this is 2.6% higher, 2069. We are tracking Ganesh Housing, 4% higher, 1325. We are also looking at stocks such as Vimta Labs, 949.75, 3.8% higher. And of course, there is no stopping Indian Hotels, age 24, a very strong move coming into E-Clerks, 3,786. And Zen Technologies, the maker of drones, is now in a fresh orbit, a digit change, 2023, 7% higher. That is how the markets are today. Sakshi.
Okay, so that's as far as the move is concerned in the markets. What else is on the bus? Adani Green Energy is coming back strongly in the F&O space. That's up by 3.3% as well. Kiran, some of these Adani stocks have again turned volatile after having that 5-day of a run-up again. Do you think they are back and levels as well? More upside is for now at least ruled out?
So overall, Adani Green or entire group, if we discuss, we have seen recently there are some news are going on. So the stock price is very much high volatile. If you look at Adani Green daily price chart, stock price went below at 868, 190 level. From there it bounced back to 1400, and from there again stock price started falling only. As of now, on daily price chart, the strong support we are seeing somewhere around 1200 level only. So if 1200 level is held, then we can expect some reversal. So whoever holding this particular stock, they can keep a strict stop loss of 1200. If 1200 is held, then we can expect prices to again retest 1400 kind of a level. So definitely one can hold this particular stock with the 1200, but for now, no fresh recommendation.
Got that. So that's the view that's coming in. All right, Kiran, we'll leave you at that. Thank you so much for being with us on the guide all our viewers through the kind of market moves that we've been seeing today, and of course sharing with us all your stock related ideas as well. A pleasure to host you on Business Today and on Market Today as well. Markets absolutely flat, viewers. 24,714 on the Nifty right now. We have the oil and gas, FMCG, autos and consumer durables showing us some strength, whereas the banks and the IT heavyweight spaces are actually on the back foot right now. There's slight cautiousness right ahead of the RBI policy decision, which will come in just about 9 minutes from now from RBI Governor Shaktikanta Das. Again, there's an expectation that for the 11th time in a row, we will be seeing the status quo from the RBI. Now, there are key reasons that most of the experts are pointing out for that. One, the inflation levels are beyond comfortable. They have overshot the RBI's tolerance level of 6%. It's at 6.2%. So that's going to be key to watch out for as to how the RBI will be moving forward on inflation going forward. Do you think there will be any kind of a tweaking on the upside risks that they could point out as far as inflation projections are concerned? At the same time, remember, this policy comes in right after the GDP shocker for Q2, where the GDP growth came in at 5.4%, which is a 7-quarter low. So will there be again a downward revision from the RBI as far as the GDP projections are concerned for FY25, which is at 7.2%. The RBI was more bullish on the GDP growth than the rest of the economists and broking companies that have come out with the kind of expectation on GDP. So will there be a downward revision on that? Those will be the two important data points that we will be looking at. The third data point will be the tone and the tonality in which the RBI governor will be sharing his statements as well. Will it be a dovish policy? In case there are any dovish signs, there could be some comfort that the D Street will be drawing from that as well. Remember, even if there is no rate cut, a CRR cut, which the street is penciling in, will actually make the street happy. If there is no CRR cut, there could be some knee-jerk reaction, like we've been discussing as well. But any sort of an indication on the softening of the rates in the new year, the first policy that could be, released in February, will again be taken in positively as of now. Of course, we will also look at how the record low of the rupee will be tackled by the RBI as well. So those will be the key points that you can continue to remember. Within a few minutes, you can be back on Business Today Television at 10 a.m. sharp to watch the speech live from RBI Governor Shaktikanta Das. We'll leave you at that. Many thanks for joining in on this morning edition of Market Today, and we'll continue to decode for you the market trends as well as what the RBI policy really now means for the markets and for your investments soon after the policy is declared. So stay tuned. There's an action-packed day ahead for you.
From Nagpur's youngest mayor at 27 to Maharashtra's second Brahmin chief minister. Devendra Fadnavis has navigated the state's political terrain with composure and strategy. Known for the infra push during his first term, project